So let's get the fixed income conversation with, of course, Doyinsola Afolabi from Afrinvest. Good morning.
Good morning.
A very interesting day yesterday, isn't it?
Yes.
That was a shot in the arm, isn't it?
Yeah.
By the central bank, 200 billion, quite a massive one on a single day. Central bank was encouraged by the inflation, isn't it?
Yes.
Trending lower,
Trending lower.
but wouldn't want the bankers having so much money
Yeah.
floating around on the street.
Yeah.
So went in quickly and mopped that massive money out of the system.
Yes.
16%.
16%.
That's a little bit of a shade of where the inflation finished off.
Yes, 16.225.
Yeah, 25%.
25%.
Yes.
Yes. Yes.
That's quite a nice way, isn't it, of what we call money management.
You can call it that. Yeah, of course you can call it that.
Okay, so put inflation into interest rate basket and currency basket and talk to us about where are we as far as fixed income is concerned. We're seeing yields still around 18, 19%. So if I'm a bit of a fixed income biased investor, I'm looking at, if I still hold on to my treasuries and bonds, I'm still about 2% home and dry as far as real interest rate is concerned, or profit on my investment.
Yes, looking at the inflation numbers and relating it to the interest rates, right? The moderation that we saw in inflation would allow investors to perceive that there will be an easing in rates, right? So we would then drop treasury bills rates lower. But then if the CBN maintains its tightening policy, we don't expect to see any, reaction in the treasury interest rates for now. So far as CBN maintains this
Are you folks at Afrinvest already thinking that the next MPC meeting will see a haircut?
For now, we think that the MPR would, the MPC would sustain on the recent gains that they've seen, the improvements in FX and also inflation. But then they wouldn't want to make any decisions that on tweaking interest rates, right? Because the two major things they look at is inflation rate and the FX. And for inflation, yes, it's moderating, but is it moderating at the pace that analysts are, looking at? No, right? Because you still have food prices, and CBN really can't do anything in that aspect because it's a function of seasonality, right? And then FX as well. What we're expecting them to do for FX is to sort of harmonize all the rates, right? That's the major concern, why they are going to focus on that in the next MPC meeting. So for now, I think they need to solve look at the big guys, right, before they can think about whether they want to. But we don't think that they are going to tweak interest rates. I'm
thinking that the central bank seems to be locked in a room through which it has little room for maneuvering. Because if we're talking about seasonality in food index, and year on year, yes, we trended a little bit, 0.35% lower year on year. But the man on the street is looking at the month-on-month inflation. And if that crept up last month, that's bad news.
Yes.
The central bank, once it lowers interest rate, more money flows out into the system, isn't it?
Yes.
And that's looking for trouble.
Looking for trouble. That's looking for trouble.
I never feel I wouldn't want to look for another trouble.
No.
I'm sure it's still recovering from the foreign exchange crisis of 2016, 2017. So it looks like someone who is not ready to let more money into the system until he has an answer to what is going to happen.
Yes. Yes, definitely. Like I said, they need to sort of give out the policies that they've made so far. They need to give room for those policies to play out properly, right, before they can make any decisions. And I think this June marks it 1 year where they
the new FX market, yes, June 20.
Where they tweaked interest rates, right? It's been at 14% since June 2016.
Yes.
They haven't done any, easing.
2 years.
Yes. And you've seen how the market has improved so far. So I'm sure they're happy with the outcome of what they've been doing. They just need to, do more for FX.
However, everyone is complaining in here and around the world that the Nigerian government is paying so much to borrow money from the markets, 19-20%. That's way, way in the heavens.
Yes. That's, I think that's more on the domestic, right?
Yes.
Yes. If you look at the Eurobonds that they raised for 2016 in 2017, that 1.5 was around 7 to 8%, which is not actually bad. But that's for 2016. But you look at the ones they've been doing so far. Yes, they have been, but they're still actually going to do more of that. We looked at the fiscal deficit from the budget, right, and fiscal deficit to GDP, right, at 2.1%, and there's a threshold of 3%. There's an act that says you can't do 3% to modern GDP, and it looks like there's still room. There's still room for more borrowing.
There's still room for more borrowing, and I'm not sure that's a very popular statement you're making. Even though the numbers say yes on paper. But if you add the domestic borrowings to it and the cost of that on the market, if government is paying 18, 20% just because I'm holding a 30-day, 90-day, 180-day paper, government paper, I just sit at home and do nothing for 90 days, and I get 20%, put £1 million in treasury bills. Yes,
but then you're looking at just treasury bills. If we also look at the foreign portfolio inflows that we've seen so far, although most investors are still very excited about the equities market, right? That's when we've seen those funds flow into the equities market. But in the medium term, we actually perceive that these rates will moderate. Right, so when you start seeing all those inflows into the market, you see investors will buy more into fixed income, the prices will start to go high, right, and then the rates will start to drop. So yes, in the medium to long term, we'll start to see decline in this rates.
Is it likely that the yield curve on fixed income, on bonds and treasury bills will go lower anytime soon?
Well, like I said, medium to long term.
And when is medium to long term? 6 months, 12 months, 18 months? Give me a scenario.
Like I said at the beginning of the show, right? If the CBN maintains its tightening policy, right, for the short term, yeah, we don't expect to see any moderation. But for medium to long term, yes, rates will start to moderate. So.
The new FX markets, let's move a little bit to the currency conversation. Do you think the new, the FX market, the I&E window and all that has benefited the equity side of the street more than the fixed income side of the street?
Well, obviously the equity side of the street, we looked at the banking sector from the 21st of April where we had the I&E FX window. And banking has done almost 50%. So
banking stocks,
yes,
50%.
Banking stocks, almost 50%.
I really missed that rally. I wish I'm in the market.
It's not too late, right?
I wish I'm in the market.
It's not too late because then we're having a conversation about if you harmonize all rates, right, and see what we've done in the I&E FX window and how the investors have, But now if you allow everyone to play in that window and look at what the banking sector has done. We looked at GT Bank, for example, with price to book of 1.8 times. And we compared to SSA region, so compared to banking sector in South Africa, and it's at 2.7 times, right? So just imagine that the CBN allows everyone to play in the market, and you will see how these banking stocks are going to appreciate. So generally, the Ocean Index is going to appreciate. So it means that comparing Nigeria to the SSA at 2.7, there's still room. There's still potentials for these stocks to appreciate. So it's not too late if you still want to go into the market.
I have a soft spot for the central bank. You know why? A bit of a sympathy, because when you take kids out to play on a ground with a lot of machines and all that, you just don't allow them to play the way they want, even though they're going to come back really injured. So, and you don't want any of that on your hands. So, the currency, you think we've done $2.2 billion. We've done $2.2 billion on the I&E window, according to the central bank. That's a very decent amount of transactions within less than 3 months.
Yes, I think that foreign investors are still they're still on the sidelines. Some investors are still very cautious and seeing how the market is going to play out, right? So yeah, so that's very decent for now. We'll still expect more funds inflow from time to time if they sustain this, FX management and all of that.
Well, when your clients ask you questions, those of you in Afrinvest, in your meetings, and they say, hey, what's going on in Nigeria and what have you, do you think a bit of a confidence is coming in on the fixed income side, on the equity side, or the FX side? Are they more confident about how we are piloting the affairs of the country from the fiscal side and the monetary side?
Yes, for the fixed income, for the INE FX window, what do you see there is what investors have always wanted. We kept saying this is a transparent, market. You don't want somebody managing the FX. So demand and supply, the price is determined by, the foreign investors. And I think they're quite happy with what they've seen so far, the transparency. Now the volume and value of transactions has been, published. And, I mean, that's great news for them. So yes, they're quite, the confidence, we're starting to see the confidence creep back into the market, right, into the economy from, clients that you speak to a couple of clients, foreign investors, and they're really, really very, optimistic, very bullish.
Doyinsola, thank you very much. A lot of folks are interested in the conversation when it comes to money and how money is being made.